Peter Redward, Head of Emerging Markets, Emerging Asia Research actually at Barclays Capital, joining us live from Singapore. Peter, great to have you on the show. Thanks very much for speaking with us. What is your reading of the earnings season that we've wrapped up in India, and what's the broad consensus on where potential earnings can take the market to?
Well, the overall earnings numbers have obviously been very good, and reflecting the very strong economy. Our view is that despite the fact that the RBI has tightened policy, despite the fact that there are lingering concerns over the US, the prospects for earnings growth remain very solid. We would in particular note the pickup in global demand for electronic products, which is typically very closely associated with a rise in software demand, and we think that the software sector, in particular the IT outsourcing and BPO side, can see a pickup in demand, and that will feed through to earnings there as well. I don't think that inflation's going to be a particular problem. People talk a lot about it, but when you analyse the numbers in detail, certainly at the WPI level, what we see is a lot of it was driven by the food price surge last year, and also by industrial metals. Now, people are concerned about those primary products. We think that the monsoon is running about average, and that will bring food prices down in the second half of the year. And then when we look at global industrial metals product prices, they've actually stabilised significantly in the last few months, and we think that that will be reflected in lower WPI inflation. Looking at consumer prices and wage growth, that would suggest that we're going to see ongoing rises in real incomes, which will flow through to demand. And so that's not really an issue. On the growth front and what it means for foreign investors, I think certainly when we talk to investors, they say, well, where in the world can we go where there's a big country that's growing at 8 or 9%? And the answer really is either China, which is not very favourable right now given policy there and given the overweight preponderance of the banks in the indices, or India. And India offers a lot of attraction for global investors, and we're seeing ongoing demand both from the equity side, but also people attempting to try and put money into the fixed income market in India, which is much more problematic, but it isn't impossible. We think that the RBI will raise rates at their new intra-meeting meeting in September. Then again at their meeting in November. Of course, all the calendar has shifted slightly with the RBI doing 8 meetings a year now instead of 4. We think the November meeting is much tougher. Probably at this stage we would say a 50-50 probability for that one. After that, we think that they'll probably pause until April or May of next year. And then when they realise that the economy is strong, that the global economy has gone through essentially a mid-cycle slowdown, not a double dip, then the RBI will come back in and nudge rates slightly higher from there. I think the INR outlook is very interesting. It's exactly what you look for as an analyst, a very interesting challenge to unfold. In the short term, I think dollar INR can come lower. I would see no reason why we can't see it below 45. The market is badly positioned. People are bearish, both onshore and offshore. We've seen, as you pointed out, a significant improvement for quite some time now, for the last few weeks, of foreign inflows into India, which is typically associated with a stronger rupee. And the dollar has weakened across the board against major currencies, and risk appetite has improved. That's not fully reflected in the rupee right now. What we think is people are sitting on long dollar positions with their fingers and toes crossed, hoping that it will go up. Technically it looks quite bad. I think it will break down towards 45. Longer term, it's a different picture. Longer term, the effective exchange rate is elevated. We're seeing the current account deficit widening out. We're seeing increased reliance on debt-creating capital flows, which the RBI have said that they will absorb. And so the overall medium-term path for the rupee is probably for a weakening. But certainly in the next few weeks, we think it can come lower, dollar INR. People have seen over the last few weeks economic surprises on the top side in Germany and France in particular, and on the downside in the United States, and people have been quite disappointed by the economic data coming out of the US relative to Europe. And what we've seen is US front-end interest rates continuing to fall as people realise that the Fed is not going to raise rates anytime soon, that there is a relatively low but rising probability of the US being in a Japan-style disinflation environment, and a realisation on the European side that things are possibly not as bad as we thought, that while Portugal and Greece remain in deep trouble, and we're likely to see further significant bad news out of them probably later this year or early next year, in the near term the news has been quite favourable, and people have been positioned badly, and as a result we've seen the euro rallying through. I think we can see the euro up to potentially around 135. That would be associated with a fairly clear normalisation of expectations and a clearing out of positioning.
Right.
From there I think it's a tough call, and we're probably likely to see the euro soften.